Okay, my name is Dan Basse. Last name is spelled Basse. I'm president of a company named AgResources Company. We've been involved in the space of agricultural commodity analysis going back to the late 1970s. We generally work with anywhere from producers, multinationals, and governments on the analysis and forward-looking aspects of markets, including livestock and dairy.
What challenges does the dairy industry face, both domestic and globally?
Well, in the short term, unfortunately, you can see that per capita milk consumption, fluid consumption continues to decline. That's something that's not new. That's been happening for the long period of time, and so increasingly the dairy industry has been tasked with trying to build solids demand, which has become a very arduous task at this time, particularly with 8 million people losing their jobs in the last 2 years. Thus, the dairy industry has tried to look at the opportunity offered by international markets. And so if you look at recent studies done by at least one firm, they're pinning their hope of the U.S. dairy industry on the opportunities offered in Southeast Asia, principally China. For any of us that have been involved in the grain trade, we know that those opportunities may be there for short periods of time, but outside of the U.S. soybean industry, they tend to be fleeting. And so I'm a little disappointed as an economist who's watched the broad spectrum of agriculture, believing that the U.S. dairy industry is going to be looking at China as its savior, because we know the Chinese do not have in their 5-year agricultural plan large dairy imports. They do have some powder imports, but nothing of a substance or size that will take the dairy industry out of its current profit problems and low milk prices that we're experiencing today.
What advice would you have, or how would the dairy industry regain some of that world demand?
That's a good question. It's only going to be accomplished by price, and by that it sometime would include a weakening U.S. dollar, which is not happening at the moment. I'm not really sure how the dairy industry best goes in terms of capitalization. It is the residual producer of last resort. It does not have a large and global network like the grain industry of offices around the world that can help tell the story of U.S. dairy products. Oftentimes we produce dairy products that are not really wanted by the world market, and so there needs to be an entire visitation of what the U.S. dairy industry is doing from top to bottom and how it needs to become more competitive in the world market. And unfortunately, which has been the case in dairy for many, many years, I do not see a groundswell from one group or another to allow that to happen. And so unfortunately, with technology gains and now sex semen and some other areas, dairy farmers will continue to produce themselves into negative margins.
What advice do you have for dairy producers as they look at both milk and grain futures and make decisions on, purchasing decisions in the long term and also short term?
Well, we haven't gotten to the good news yet, and the good news is that the dairy farmer is not alone. His friends in the grain industries are about to enter a little bit of the space where he's in. I use a chart in the beginning of my presentation which reflected the profitability gains in each sector of the agricultural industry, I think going back for the past 30 years. And the one thing that really stands out to me is that dairy, corn, and to a lesser degree soybean producers saw the biggest productivity gains during that time frame. In the corn industry, of course, we had ethanol, which was a government-sponsored program to help the corn farmer. In the soybean industry, we have, of course, China helping to import record amounts of U.S. soybeans. Fortunately, the dairy farmer has neither of those, and I'm not sure how we get a world international buyer to really come forward and make significant purchases as we see it now. And so the good news is that grain prices probably will be declining and have a reduced volatility going forward if there is not a drought affecting the major producing area this summer. And so that's the good news, in that the dairy farmer, even though he is facing lower milk prices, he probably will see his forage and feed costs also come down, which will help his margins or at least limit his losses. The next question then would become, what does sex semen do, and how have the herd buyout programs of last year really manifested themselves? We do not advise herd buyouts as we saw last year. As you can see, the industry quickly rebuilds itself, and we're already seeing herd expansion in places like California, Florida, and to a lesser degree Wisconsin. And so those kind of programs just don't seem to work. I think in a general sense, the only thing that'll work is prices being down for an extended period of time. And in saying that, farmers should be looking at what we call the slope of hope, which is milk futures, which oftentimes trade on a Class 3 basis, above $15 in the deferred position. By that I'm saying sometimes 3 to 9 months out. And so farmers should be looking at their price of grain and looking at that slope of hope and trying to use some hedging so that they can make, lock in some margin on some percentage of their production and at least achieve some level of profitability.
What role do you see sex semen playing, and how do producers approach these types of technologies?
Well, the dairy farmer, because of his willingness to always take on new advances in technology, is very aggressive in using sex semen from what we find. We think there'll be an additional 160 to 170,000 heifers which will be brought into production this year. We think that number maybe move up to 240,000 next year. And so the ability to get just she calves is a tremendous advantage for the U.S. dairy industry. And so it continues to build herds, and the marginal costs of those building herds are lower because of the ability of the farmer for a very modest cost per vial to sex his calf that's forthcoming. And so it's just going to add supply pressures on the dairy industry looking down the road.
Anything additional you think we should include?
Well, the one thing I would hope that happens is that we do have a new farm bill up for discussion. My hope would be that we somehow leave the milk marketing orders that have been around since the last Great Depression in the 1930s, and we move to more of a farm revenue-based program in which dairy farmers on a highly subsidized basis will be given the opportunity to buy insurance on milk prices that will at least assure some profitability. I think that's important. The next thing, of course, is that the dairy industry needs to galvanize itself and somehow be like the soybean associations or the grain associations, in which they really go out and push in international markets. It's a dirty job. It takes a lot of time, but ultimately that's where the U.S. dairy industry needs to go if its productive capacity and gains are to remain at the levels where they are today.